All right, last time we talked about bank statement loans and how many self-employed buyers that was a breakthrough and helped out a lot. But what if bank statements don't tell the whole story? What if your deposits fluctuated? What if you're really invest into your own business heavily? What if your income looks a little inconsistent month to month, even though your business is strong? Now, today we're going to talk about another powerful path, one that most entrepreneurs don't even know exists, and it's the profit and loss loans. Let me introduce you to my client, Sarah. Sarah owned a boutique marketing agency. She had revenue was really solid. Business was growing. She was reinvesting aggressively, trying to increase the software and building the team. But her bank deposits, they did not look very impressive every single month. When she applied for a mortgage using the bank statement loans, the numbers felt a little tight. So what we did was we took at a different look and we took advantage of the profit and loss statements. Now that told a very different story. Now here's the truth. Most business owners don't hear. You're not just your deposits. You are your revenue, your expenses, your net income, your business model, and a profit and loss that allows us to look at your full financial picture, not just the cash flow in through the account. So what is a profit and loss loan? Basically, it's a mortgage designed for self-employed borrowers who may not want to use full tax returns, may not qualify using only the bank statements, and instead qualifying using a 12-month profit and loss statement prepared and signed by a licensed CPA, enrolled agent, or a sometime tax professional. And yes, that matters because this isn't a write yourself check how your business is doing scenario. So what an underwriter is looking for is 12 months of P&L signed by a licensed tax preparer, confirmation at least that the last 2 tax years returns were received, minimum 2 years self-employment, at least 25% business ownership, and the structure protects you and strengthens your file. Now, here's where it gets interesting. Unlike traditional loans that penalize deductions, a profit and loss loan focuses on a reasonable industry appropriate expenses. There are minimum expense factors, and if you're in a service-based business, these typically are minimum 10% expense factor. If you're in a more of a product-based business, they usually at a 30% minimum. The goal isn't to inflate income. The goal is to reflect reality because your business deserves to be evaluated intelligently, not generically. Now let's talk numbers. Depending on your credit profile and loan size, you could see financing for up to 80% or even higher in some scenarios. Maximum loan amounts can reach into the multi-million range. Debt to income ratios can go up to 50%. In certain cases, expanded debt to income ratios may go to 55% with strong compensating factors. But here's the key. This product is designed for experienced business owners, not brand new startups. Underwriters want to see stability, documented self-employment history, clean credit, and reserves. Typically 6 to 12 months of reserves to cover the mortgage payment on loans on different loan sizes. This isn't a loophole, it's a strategy. It basically got my client Sarah back online. Once she restructured, got her loan, CPA-prepared profit and loss statements, her income reflected actual performance of the business, not just deposits, not just taxable income, her real profitability. She closed on a home she had nearly walked away from. And here's what she said. I didn't need a different business. I needed a lender who understand how business works. Now, if you're watching this and thinking, my tax returns show too little, my deposits are inconsistent, I reinvest too much, I'm profitable, but it doesn't look clean on paper, then this conversation matters, because traditional underwriting was built for W-2 employees, but the economy has definitely changed. Entrepreneurs are the backbone of our growth, and mortgage solutions have evolved. And here's something important to understand. Bank statement loans and profit and loss loans are not competing strategies. They're tools. They're right. The right one depends on your deposit consistency, your expense structure, your tax strategy, your credit profile, and your long-term goals. Sometimes we compare both side by side, and sometimes one's clearly wins. But the point is that there's almost always a path. And that's why we're talking about this. When you structure it correctly, let's be real for a moment. Being self-employed takes courage. You bet on yourself. You live with risk most people avoid. And then you try to buy a home and you're told you're too complicated. And that can be very frustrating. But complicated doesn't mean unqualified. It means misunderstood. And when underwriting understands business income properly, everything changes. So, how do you know if your profit and loss is right for you? Let's start here. Have you been self-employed at least 2 years? Do you own at least 25% of your business? Can a licensed CPA prepare a clean 12-month P&L, profit and loss statement? Do your numbers reflect real profitability? If the answer is yes, you may have more buying power than you think. In our last episode, we talked about bank statements. Today, we talk about profit and loss. In the next week's episode, we'll compare bank statements versus profit and loss, when to use which, and how to strategically prepare your file before applying. Always being set up and preparing, because the goal isn't just approval, it's confidence. If you're self-employed and serious about buying a home, don't assume, don't guess, don't let one know define your future. Schedule a free self-employed mortgage strategy session. We'll review your numbers, look at both options, and build a plan around your business, not against it. All right, now you can click the link below. Your business is real, your income is real, and your homeownership dream is real too. Let's structure it right away. So we will see you on the next video. And please like, share, and subscribe. Thank you for watching.